Hello traders, this is Brian Benson. I'm the options trading specialist at the Technical Traders, and I wanted to do a quick review on a trade we closed this morning and go through the logic and a bit of the setup. So here we have a daily bar chart of the QQQ NASDAQ 100. We've been in the neighborhood of all-time highs since the breakout above the high back in March. So the market has been looking like it wanted to go higher and push for a new high. And we knew we had a catalyst coming up yesterday evening with NVIDIA earnings after the close. Earnings are always a crapshoot, can go either way in a big way. So I wanted to structure a trade where we could risk a small amount and still have a nice trade. It would work well in a small account or even a larger account, but we didn't want to risk a lot on the possibility that we could be wrong and pretty much lose the whole trade. So if you looked at the options on NVIDIA itself, of course, they were very inflated in price, very high implied volatility for expiration tomorrow on Friday, and a single call contract on Tuesday. In NVIDIA, if you went $50, $60 out of the money, bought a $1,000 strike price call for expiration tomorrow, it still would have cost you somewhere around $20 or $2,000 per contract, and that full amount would have been at risk. So what we wanted to do was have a lower risk way to trade this, something that would work even in a smaller account. And I like to think of this trade as upside insurance, where we're not betting big, but we can get a nice trade if we're right about the direction. And if we're completely wrong about the direction, we're not going to lose a whole lot. So what I did was we looked at TQQQ. Now this is a triple leveraged ETF on the NASDAQ 100. I'm going to switch to an hourly bar chart. And here it is Tuesday about noon when we took this trade. And at the time, I bought the $64 calls on TQQQ that were expiring tomorrow. And I paid $1.46 per contract, or $146. And you could have done this trade with as little as one contract and risked no more than $146 on the trade. Now, I don't normally advise holding a triple leveraged ETF like TQQQ for any longer period of time, but for a swing trade for a couple of days, it can work out just fine. And I'll give you an example of that. If we look at the QQQ, in the time I put the trade on between noon on Tuesday and the gap up open this morning after the big NVIDIA earnings, we had a QQQ up about 1.5% from here to the opening this morning. And if we go back to the TQQQ chart, we see that same time frame TQQ was up about 4.5%, so about 3 times. So TQQQ, the triple leveraged ETF, performed as it's supposed to and gave about 3 times the move that we saw in QQQ. Now, on top of that triple leverage, we're adding additional leverage by using options and buying a call. So if we look at a chart of what that $64 call on TQQQ did between noon on Tuesday and this morning's open, we have the value of the call up about 88%. Now, we were in a fast market, big gap up open this morning. I didn't get the full 88%. I closed my trade at plus 64%. But the trade certainly worked as intended, gave us low risk, high leverage. We're able to close the trade for a nice 64% profit. So that was the trade. Hope it helps. Feel free to comment or email us at thetechnicaltraders.com.